President-elect Trump reportedly looking to make self-driving regulation a top priority for the Department of Transportation once he is back in the White House. That headline has Tesla shares up nearly 7% this afternoon. And while our next guest points out that Tesla may not be the front runner in the autonomous driving race, he does, however, argue that they own the narrative. He just raised his price target on the stock from $270 from $235. Dan Levy is senior equity research analyst at Barclays covering the auto space. Dan, welcome. Good to have you with us.
Thank you so much for having me, Tom.
Why is Tesla seemingly not alone, but why is it benefiting so much from this report that there may be a sort of a fast tracking going forth on self-driving cars?
Yes. So I think we have to take into consideration that part of what's gone on with Tesla, and it's not just today, but really in the last 2 weeks since the election, is really the magnification of the Elon premium in the stock. From a fundamental standpoint or a business perspective, we think that could be mixed to positive for Tesla, maybe slightly negative on the EV sales side, positive from the perspective of easing autonomous regulations. But really what this does is it's Tesla being magnified as the Elon Musk premium, the can't bet against Elon narrative. And I think that's a lot of what's going on here.
So you ascribe it more to Musk, his relationship with the incoming president, the fact that he's going to be highly influential and probably will benefit from that, than anything else here?
That's a lot of it. From an autonomous perspective, this can be a benefit to Tesla. Elon has talked about regulations in some way as a gating factor on their path of autonomous, but we just caution, to not be too optimistic that easing regulations solves all for Tesla on the autonomous side. In fact, the challenge they may have is that by easing regulations, and specifically, I think what Tesla may be looking for, what others may be looking for, is harmonizing state standards with federal standards. This actually gives an opportunity to arguably Tesla's largest competitor in full self-driving or fully autonomous driving, Waymo, to really fast-track expanding to other locations.
How material, if at all, would the removal of the $7,500 tax credit for buying an EV be to Tesla?
It would likely be net negative. We think that roughly 2/3 of Tesla's U.S. sales benefit from that credit right now. We know that it's roughly 30 to 35% of their U.S. sales are leased. All leases get the $7,500. We assume the leasing loophole would be removed as part of this. And then there's likely another piece of sales that are benefiting from the rest of the $7,500 credit. So it would likely be negative. What that essentially does is it can be considered almost like a price increase. But on the flip side, the opportunity for Tesla is to consolidate share within the EV market, because Tesla is really the only automaker that is profitably selling EVs in the US. So as tough as this would be for Tesla, it's much tougher for other automakers that are right now losing money on EVs and really much more so need that credit.